Good evening. My name is Dick Jones. I'm the tax problem guy. What do you need to do if you're going to solve a tax problem on your own? Well, you need to start at the beginning. How did you get into this tax trouble? Did you procrastinate and not file tax returns? Or was it IRS notices because you couldn't pay the tax returns? Whatever it was, you need to figure out what caused it and how you're going to solve it. And then the next thing you need to do is you need to be committed to solving that problem. You know, it's one thing to say, I want to solve the problem, stick your head in the sand and think it'll go away, but it's not going to go away. And the letters you don't pick up at the courthouse or at the post office and that you stick in the drawer, those are not going to go away either. So you need to open the letters and find out what IRS is wanting from you. You also need to file your tax returns. Well, where do you start if you have this massive stack of letters and you also have unfiled tax returns? Well, that's what you need to find out first. If you have tax returns that are not filed, you need to file those with the IRS. Even if they have balances due, or if you're trying to solve a tax problem, they're not going to talk to you unless you have all of your tax returns filed. That means if you're a corporation, you have all of your corporate tax returns filed. Partnership has all the partnership returns filed. If you have payroll taxes, all the payroll tax employment forms need to be filed, along with the 940s, the federal unemployment forms. So that's the first place to start, is make sure that everything that you have is filed with the IRS. Then you need to figure out, have you been receiving letters from the IRS? If so, what do you need to do about them? Are you going to owe money this tax season? Do you have all of your estimated tax returns, your estimated tax payments paid? If not, why not at least pay something toward them? Because if you had estimated tax payments due from last year and they're not made, IRS is not going to talk to you again. So you need to get current from this point on. Don't worry about what you owe on the back end at this point, but make sure all of your filings are current and are where they need to be. If you cannot pay those returns, go ahead and send them in. Make sure that they're all filed. If you can't pay them, then you can always do something going forward, an installment agreement or something else. But you don't worry about the back. Let's say you've got $500 that you can either pay toward your back taxes, or you can put on your estimated tax payments, or you can pay what you're going to owe to the IRS this coming year. Look forward. Do not look back. Draw a line in the sand. That's where you start. Pay your estimated tax payment or pay on this year's taxes, and then we'll worry about solving the back problem. The thing I said in the beginning is, if you're getting a bunch of letters, open them. See what IRS is wanting. They may send you a letter, if you send them a letter, saying we're still working on trying to solve your problem. Like I got one from a client today. It will be another 45 days before they get back to us. Well, that's fine. If they're about to levy your bank account, you need to know that, because IRS is not going to go away. If your account is in an automated collections thing, all they have to do is push a button. You've got your wages levied and or your bank account levied. You don't want that to happen. That's what those letters might be about. So everybody sees the ads on TV and wants to know, can I settle my debt for less than what's owed? Well, the answer is sometimes. You need to explore all of the options and see what's available to you. You may want to pay it by payments. You may want to try to put your account in a non-collectible status if you cannot afford to pay IRS. You need to ask them to put it in a non-collectible status. You may qualify for what they call a partial pay installment agreement. That's where the account pays off when the statute of limitations drops off, and you actually pay a whole lot less in that instance than you would if you paid your entire debt. And there's some advantages to doing it that way as opposed to an offer in compromise. The one downfall to that is that the tax lien stays on at the courthouse, where an offer in compromise, if you pay it, it's lifted. So the first thing you need to know is, how much do you owe IRS? Is it above $25,000 or is it below $25,000? And if it's below $25,000, then you need to call the IRS and try to get a payment plan set up. They usually do not deal with any financial information if you owe less than $25,000. Pick up the phone, propose to them the payment that you can afford to make, and see if that will work for them. If it will, you're done. You need to start making your payments. But what you need to know there is that you need to pick a day of the month that it is due by, and that is the day that your payment will be received by IRS, not the day that you mail it. So you're looking for a date that your check will be in IRS's hands. So you need to mail it about a week prior to that, so they'll be sure and receive it and need not default your installment agreement. If you owe more than $25,000 and you're dealing with the automated collection service, that is that you've just been getting letters from the IRS and you haven't heard from a revenue officer that is local, then you can fill out a Form 433-F and call into the automated collection service. That number is on the top of your notice. You will then be connected with an operator who will help you with your call, and they will go through all of the information that's on the 433-F, and then they will make a determination of whether they will accept your payment plan or not. At the bottom of the 433-F, you propose how much you want to pay, the date that you want to do it, and if you want to throw, say, $1,000 at it to reduce the amount going in. The interest and penalties continue to run on a 433-F and an installment agreement. If you're dealing with a revenue officer, you're looking at a Form 433-A, which is a collection information statement for an individual or a sole proprietor. So they will want that information first, and then they will check it and see what they want to do and if they can come up with an installment agreement that is acceptable to you and to them. Let's say you don't think you can pay it, or you actually cannot pay your debt. Let's say you're on unemployment, or you've been had something happen that you took a lesser job and you really can't afford to pay ACS or the revenue officer. Have them then ask to be put in a non-collectible status. They will go through all of your outgo and income, and if you have more outgo than you do income, they will put it in what they call a non-collectible status. That means they will leave you alone for the time that it's in a non-collectible status. Well, how long is that? Well, nobody knows. It's reviewed once a year, and as long as your income doesn't change drastically, then it could stay in a non-collectible status until the statute runs out. So, but remember, it's reviewed once a year after you file your tax return. Penalties and interest continue to accrue, but the thing you do there is you can deal with it later. You don't have to deal with it now. Like I say, it is reviewed once a year. If it comes out of non-collectible status, they will start sending you notices again. You can look at a partial pay installment agreement. What is that? Well, it's kind of like an offer in compromise, except you don't have to pay them a lot of money up front. You pay that in installment payments with what you've got left over to pay. Let's say it's $100 a month in my example. You will pay $100 a month, and pretty soon the statute will fall off, which is generally 10 years from the date that the tax return was filed, and then you can be shed free of that debt, and you won't have to pay them a lot of money up front. Penalties and interest accrue until the statute date runs out, and then the lien will be lifted at the courthouse and your debt will fall off. What is an offer in compromise? That's the one you hear a lot about. It's a one-time settlement. Collection efforts are suspended while you're going through that. So remember, if the collection statute is 10 years and it takes you 6 or 8 months to go through the offer process and you're not successful, you have extended the statute of limitations by that long a period of time. So you want to make sure that you have all your ducks in a row and you think you're going to get an offer in compromise before you send it in. Interest and penalties accrue on this one too, but obviously if you're successful with your offer in compromise, you settle it at the end, the tax lien is lifted at the courthouse, and you pay them the amount of money you say you're going to pay them. Then you have to stay in compliance for 5 years, or they can say that that agreement is null and void. Well, if you're doing an offer in compromise, usually you have to send in a 433A with all of the attachments. You have to send in a $150 processing fee and 20% of the amount that you offer them. If you've got business returns and individual returns, you have to send in $250 fees because you actually have 2 offers. So when you send it in, it usually takes about 45 days before you hear from someone, and then they will say it's assigned to a person, and that person will be contacting you. Usually you got another 45 days, but no collection activity will be going on as long as you have the letter that says that they are processing the offer. Well, the next letter will say that we probably need more information because this time your information is stale from what you sent them before. If you have questions on what they're needing or what they're asking for, call the person on the phone and tell them that you don't understand what they want and ask them if what you're getting ready to send them is okay. Also, if you see you're not going to be able to meet their deadline that they give you, call that person in plenty of time to extend the deadline. They will usually let you do that once without any hassle. The second time may be a little bit of a hassle. So depending on what's going on, but don't be afraid to pick up the phone and talk to them. So if your offer is accepted, then what? Then you have to pay the money that you say you're going to pay them. And again, you have to stay current for a 5-year period. How does IRS assess what the offer is supposed to be? You pay the amount of equity in your assets plus any leftover money, and that is what they come up with an offer. So let's use an example. You've got $100 left over at the end of the month. They multiply that times 48, and so now you've got $4,800. So if you've got $10,000 equity in your house, that's another $10,000. So you're at $14,800, and let's say your average bank account balance is $200. So now you've got a $15,000 offer. If that's what you sent into them, the $3,000 would already be paid. That's the 20%. So now you've got $12,000 to pay them coming out of the offer, and you need to know how you're going to do that. And when you do that, then you're okay. But then you're on a 5-year probationary period that if you don't pay them like you're supposed to and file your taxes when you're supposed to, then obviously they can throw all of the stuff, all of the tax debt that they forgave back on you. So it's been my experience that if you're going to do an offer in compromise, be prepared to go to appeals. Appeals deals with the last ditch effort before you go to tax court. Appeals officers are usually people that have been in the field as revenue officers and have got a lot more experience. If you agree with what the first line revenue officer said on their offer in compromise, that's great. Appeal the issues that you don't agree with, and that may be all you have to pick up in an appeals and talk to the appeals officer about. Those appeals are usually made by phone. You can go in if you're in a city where they're located, but generally they're done by phone, and they want you to furnish the documentation that shows how you're coming up with your calculations. That takes a while, usually after you do the appeal process, and if your account is turned down in the offer section, you have 30 days in which to do that appeal process, and it has to be back in their hands within that 30 days, or you cannot appeal it. Your offer will be turned down. And most offers are turned down. So rest assured, if you get turned down at the first level, you've always got appeals, and that's usually where you wind up going. So everybody's situation is different. How do you solve your own tax problem? Well, that depends on a lot of things. I worked a case today where I've got a spouse that is not involved in the tax problem of her husband, which is working to our advantage. He owes about $140,000, but if they get ready to seize any assets, they can only get half of it. They were threatening to seize his car. Well, if they sell his car, they're only selling half of it because his wife owns the other half. So I don't think they'll do that, but anyway, that's kind of how that goes down. So each circumstance is different. How much money are you making? How much are your assets worth? When you value your assets, you're valuing them at a garage sale price. Don't overvalue your assets. Everyone wants to be proud of how much their house is worth. This is not the time to do that. But deal with your tax problem. The sooner you deal with it, the better off you are. And if you need professional help, we're here to help you. We've got several programs that we can do. We can help guide you along the process. You can hire us to do the process, or we'll be in touch and help you in any way that we can. Let's bring up one point here. When you're sending in your 433A, you're putting down how much money you spend on food, clothing, etc., how much you're spending on houses. IRS uses national standards, which you can find on the internet, and if you're above what their national standards are, then you're going to have to file proof with the IRS, or all they will allow you are what your national standards are. So, a couple of other points. If IRS sets a deadline, make sure you stick with it. If you miss deadlines, that's when you get in trouble. So call them back if you can't make it. Don't make things worse by just continuing to miss deadlines. So if you need help with any of your tax problems, call me, Dick Jones, at 573-341-5578, taxproblemguide.com on the net, and be sure and look for at our website, because we update it frequently. IRS law changes, tax collection law changes, and we stay up with the latest and greatest. We will post information on our website, both by video, by audio, and by just articles that plus we keep up with all of the latest income tax laws. So visit us often. If you need help with a tax problem, that's Dick Jones, 573